Welcome back, pure structure traders, for another market analysis for the London session and potentially into the US session. Today is March 2nd, 2021 here in Hawaii, and it will be March 3rd, 2021 in London. Today we're going to be going over S&P 500, give you guys some levels we're looking for the London session, and potentially those levels could hold up into the US session. So we're going to start with S&P 500 and then move into gold. Let's go ahead and get started here. So for S&P 500, you can see we had a bullish trend, but a range day for the most part today. Some strong level of resistance at 98 to 99, and then support came in somewhere around those 68 to 69s, as low as about 65.75. So what are we looking for during the London session? We are actually going to look to see if this can pull higher. You can see we got a level of resistance 85.75. That's my first area that I'm looking for the market to try to pull higher. Did it get a nice bounce? So we should see the movement try to get up into that area. Now, if we do want to see if the market actually gives us a scenario like this where it pops up against the level, fails to get through it. It might even get a little bit through it, but it comes right back underneath, fails. We may get a move right back down, but if it continues to hold this support right here, or even a little bit deeper right in these two areas, we could actually see this market try to break 85 and climb back up into its levels of resistance at about 92 to about 98 to 99, right back up in that area. You can see we're playing right in that area of a range today, here and also right here towards the bottom. So you can see bullish trend, range day. We did pop above these tops, but you can look at that, and we didn't start to trend back to the upside. Started to make these lower highs, never got to make a new high from there. So started to pull down. Do want to see if the market gets into this area and then tries to break those 85s and then pulls up, tries to retest and maybe break through, try to get back to those 39.10s from there. That would be a good opportunity. Now, if you want that short side, you can continue to look for that resistance 85.75. If it does break down, you can take that short here, try to move it down, get it back into that level of support here at about 65. Underneath this area though, it is going to be a potential move back down into our next level of support at 38.48. We're going to look out for that resistance underneath that level. If we do get it as it pulls back, that's going to be a nice sell the rip opportunity there. Back into 48, another level 38.25.75 as support, and underneath that 21.75. I'm sorry, 38.25.75 and then 21.75 as another level of support underneath that. There is some other minor levels in between, but I'm just going to kind of keep those up for now. Those are my bigger levels off major supports and resistances. Let's take a look at a smaller chart here on S&P, give you guys some closer views on that. So you can see if I scroll this over here, you can see it's trying to gradually climb right back into that area of resistance there. So we're going to allow that to happen. If it gets here and it continues to fail, that's going to be our first area of interest to try to pull it down, 85, 86. And then again, if it holds that support, we may see it try to go through and break up through those 90 to 92s, get into those 98 to 99s as this area. Might even do this where you see a scenario where it breaks up, comes back down, pulls a little bit down, tries to get lower, can't do that, fails to do that, and then goes back up from there. So we'll see. We'll see what the market gives us at those areas and if it actually plays out like that. If it does, it's going to be good opportunities for trade. Let's take a look at gold here real quickly for you guys. You can see gold was strongly bearish on the move down. We rounded out and started to come right back up here. You can see what's going on. Held the higher low right in this area off the prior level of prior support, turned into resistance, and then turned right back into support. So you could see that structural movement. Now, if you guys struggle with this at any point, again, it's best to start to review these charts. It is a matter of understanding principles and fundamentals of trading, but it's also a matter of screen time, how much time you look at this stuff. It's honestly like putting a puzzle piece together. And when you do that, when you're trading, you want to be able to try to piece these things together as best as possible so you can read and understand what's going on and take your trades with the best understanding you possibly have. Again, remember, this stuff is not so much about the performance of the actual trade. It's more about the performance of the trader, right? The trade can't be put on unless you're the one placing that trade. at any point. So the psychology behind this has a lot to do with you as a person, as a trader, how you think, how you react, what your actions are when you start to read and understand, what your reactions are when the market comes into your level and shows you price action movement, structures itself out. Do you take the trades the same way? Is your process the same, right? Do you have a rules-based process of how to enter the trade, what it looks like, what a double bottom looks like, what a double top looks like, inverse head and shoulders, what that actually looks like? Do you consistently take the trade the same way, right? You got to gauge your performance as a trader, which means when you step into this market every single day, if you have a set of rules where you only take trades long off of 2 rotations, and you can only take a total or a max of 5 trades, and if you lose 2 or 3 in a row, you're done for the day. Do you follow those sets of rules? Are you taking your trades around your levels? If you're not taking them around your levels, where are you taking them? Are you putting the risk on at the best possible or highest probability areas to put that risk on, right? You got to gauge all of these things because it's about how you, as a trader, perform each and every day. And if you don't have a consistency in performance, then you're not going to have a consistency in profitability, honestly, because it's the performance that actually draws the money. It's the not the outcome of the trade, but the process, right? That process of how you take that trade every single day. Can you best understand how you're reading these markets and apply a strategy or approach within the correct context of the market? And I know we go back and forth time and time again here, even on YouTube and with, members here at Pure Structure Trading about context of the market and how important that is, because it's one of the main things, honestly, when it comes to trading. If you do not understand the context of the market, it doesn't matter how much strategies you have. It doesn't matter if you have 5, 10, 15 strategies. You will never find consistency in trading because unless you know the context of the market, the approach or the strategy that you have is going to be inconsistent if you're not having that correct context, right? You might be wanting to buy a dip and you see opportunities to buy a dip, but the correct context is that the market's in a downtrend. Would it be best to buy the dips or would it be best to actually sell rips, right? You got to be able to understand what approach or what strategy to put on within the correct context. So that's why we're giving you guys here the correct context of the market, the trend of the market. You can see S&P was in a bullish trend. You had a sideways consolidation for the day, right? And sideways consolidations work best by selling tops and buying bottoms, right? If you're playing in between that, it's going to be very choppy for you, right? So really the best areas to trade would have been somewhere around 98, 99 to short, and then going long after it bounced off 68 to 70 and then continue the long up from there, right? So if we're looking at context here on gold, downtrend going on, but within this downtrend we're actually creating these higher low movements, right? So if structure holds right here at 1731.6, if that price action holds, we're actually going to see this market try to gradually pull up to 1740.2, then 1745.5, and that's going to be its movement, right? That's what we're going to want to see here on gold, is that gold is going to try to hold this structural support and then pull right back up into our levels of resistance. Above that, 1755.4, 64.2, then 66.9. Now if price gets dipped underneath, our job is to wait to see if price reacts as resistance right there. If price reacts as resistance, we're going to look for that price to come back to our next levels of support. Can the price hold right here? Yes, it can. Right? If that's the case, if that's your next level of resistance and you want to see support, or you see support happen right here and you're short, your job as a trader is to take some positions off here and then try to let the other ones run lower. If it doesn't run lower and it comes back, you need to make sure some of your positions are put at least at bare minimum at break even, so you're not taking any heat on this. All right, so that's what we're going to look at. If price does develop a move underneath 1731.6, look for that movement back down. Now, if you come back up above 31.6 like we are, look for that support. All right, we're going to look out for that support right at that level. Now, this is going to be a little bit of a difficult level here, right? If you don't get nice bounces of support right off that area, then don't take the trade. If you don't feel comfortable with it, again, don't put yourself into a position until you start to best understand and read that market. You can, if you've been doing this for anywhere from like a year and a half to 3 years or more, right, you can start to understand what you're most comfortable with and what you're not, right? It's not so much about just understanding chart patterns. Chart patterns are great, But again, you need to best understand when to look out for those chart patterns at specific levels, right? So if you're not comfortable with that, if you don't see what you want to see, look for the dive underneath. If you don't see that, then just wait. There will be more opportunities. Price may come right into this 1740, fail that, double top, give you an opportunity, short it back down, right? So much different opportunities you can have in trading, so there's no sense to try to rush yourself into any trade, right? Make sure the trades that you're putting on are going to be the best or highest probability trades you could be taking at the moment, so that way you can gauge your actual performance in trading. Let's take a look at a smaller chart here, guys. So you can see as we develop a closer view into this, we are gradually trying to pull back up. You can see this market broke right back up. See, we'll see if it comes right back down here. If it does and starts to hold this, it may even hold a little bit of a higher movement, but if it starts to hold this area right here, this is going to be a good opportunity for us to look for that long back to the upside. Now, some little bit of resistances maybe before that, 35.2, somewhere up over here at 36.2, and then you're going to see somewhere around 37. Now we can gradually climb all the way into those 40s, but we may end up having some resistance that comes in a little bit before that, right? So keep an eye out for that, guys. That's what we're going to be looking for on S&P and also on gold. Hopefully you guys enjoyed that. If you guys did, please go ahead and smash that like button. If you are not subscribed to the channel yet, please go ahead and subscribe. If you guys are, thank you very much for watching and smashing that like button. Really appreciate that. If you guys have any questions, feel free to pop them in here on YouTube. You guys take care. Have a good night.